Senator Smith? You got 3, I think.
Good morning, Mr. Chairman and members. We have, I have 3, one that's a constitutional amendment, and it's it's a statutory bill that goes along with it.
We're going to take Senate Bill 154, which will be the constitutional amendment first.
Okay. All right.
You can speak broadly about both of them so we can
Yeah, so
get the full
they're
picture.
both, as well, and
Correct.
joined. One is the statutory language, one's the constitutional amendment for the ballot. What this series of bills would do, members, is, you know, when we, in 1978, when we did some revisions to the Constitution, allowing with the millages that are passed by local taxing districts, we said that every 4 years we have to do reassessments, and in those reassessments, within that period of time, the assessor, the taxing district, has to maximize their millage rate, or they lose that maximum rate if they don't go to it. So what happens is, over time, many taxing districts just automatically jump up and they push their millage rate up to the maximum allowable millage, instead of maybe letting it float down to a lower rate and giving a little bit more of a break to the paying bodies, the paying individuals or businesses. Well, what happens is, because they will lose that maximum rate, lots of times they just push it up to make sure they have that room in there. What this bill and this constitutional amendment would do would be allow those taxing bodies to let that rate float down at reassessment and not jump it up to the maximum rate, but allow them over a period of time to still go back to that rate if they ever needed it. Because right now they will lose it permanently if they don't use all the rate that they have. This would allow them to keep it lower and then go back to that rate if ever needed to, without another vote of the people, but it would be a vote of the taxing bodies still in a public meeting, as they do currently. So, and with me I have Lafourche Assessor Wendy Thibodeau, who can probably much better explain this issue than I.
Yes.
Good morning, Ms.
Good
Thibodeau.
morning.
How you doing?
Very good.
Last time you and I were in a public setting, me and Senator Reese, you were a little rough on us. Just saying.
You didn't tell me that.
I left that out. That was a different topic. It was a different topic.
That was a totally
I know this is
different
shocking
topic.
everybody, but this is not about watercraft. So
I appreciate that.
Senator Carter was like, it's
Well-
not about watercraft.
Welcome.
Thank you for having me. My name is Wendy Thibodeau. I'm the Lafourche Parish Assessor, and I've been in the assessor's office for 25 and a half years, and I've been assessor for the last 7 years, and this is a thorn in my side, because this is mandated on the taxing districts. I'll go back. In 2000, I'm going to use the last reassessment cycle. In 2016, I reassess all of the property in the parish. I send those numbers off to the legislative auditor. They adjust the rate, the millage rates for the taxing districts, so that they collect the same amount from 1 year to the reassessment year. Typically, those rates get adjusted down. They have the option, the taxing districts have the option to roll their millage forward to the maximum rate. If the district does not roll that millage rate up to the maximum amount before the next reassessment, they will lose it. That is mandated in the Constitution, that they have to levy the maximum rate or they will lose it forever. So say there's a fire district in 2016, I did reassessment, the legislative auditor adjust their maximum millage rate is 2.5 mils. In 2016, when reassessment took place, it had rolled the millage back to 2.0 to generate the same revenue. So in 2019, that's their last year that they can roll all the way up to their maximum millage rate. They would have to roll back up to 2.5, or they would lose the 0.5 mills forever. So what happens is taxing districts, in fear of losing that, they automatically they go through the process and they roll their millage up to 2.5, even if it's not budgetarily necessary, just out of fear. That's why you see some of these districts that have the surplus that they have. So what this does is it removes the mandate, because I just feel when districts do that, it is unjustly taxing businesses and homeowners alike. And with business, they pay the bulk of that increase. So what happens is, instead of the business keeping their money, if the district wasn't punished for levying the maximum rate, the business would be able to keep that money, reinvest it in their business, and keep it open, especially during hard times, instead of that money sitting in a district's savings account drawing interest for the district. This is just something that never made sense to me on why government would force a taxing district to tax business and people when it's not necessary. And what this does is just remove that mandate so that the district, if they don't need a new fire truck or anything before the next reassessment, say they need a fire truck in year 7 of their millage, instead of, they can still roll up to their 2.5, but they won't be punished if they don't roll it up in year 3.
So, reading between the lines, you believe that this will prevent roll-ups or unnecessary roll-ups. How many people in your parish rolled up this year?
Every one of them. Well, not this year. A lot. That is a misperception. When I first got elected, I mean, all of my districts would roll up. I would do reassessment, and they rolled up to their maximum that year. Well, I went around talking to my districts. Come to find out, the misperception was that they thought they had to roll up to their maximum the first year in reassessment, or they were going to lose it. So now I've kind of educated my districts, but they're still going to lose it before the next reassessment. So what was I really doing? I was delaying the inevitable for 2 years. So I've spoken to the port, I've spoken to Bayou Lafourche Freshwater District. There are plenty of districts that do not want to roll up because they want to be fiscally responsible. They want to be good stewards of the tax dollars, and I'm one of them. I hated it. In 2019, I had to roll up to my maximum or else I was going to lose it. And if I lose it, the only way I get it back, say, I have a power surge and my computers blow up and I need to get funding, the only way for me to get that millage rate that I lost back is to come to y'all and ask for it. So a lot of districts have that mindset, and I'm just trying to take a small step to make districts realize that they don't have to do that. If they don't want to roll up their millage rates, they can roll it back. They can be better stewards of the tax dollars, and they're not punished for being good stewards of the tax dollars, and the public is not being punished for unjustly taxed. They're not being punished by these districts.
Question by Senator McMath.
Thank you, Mr. Chairman. It's actually more of just a statement. Prior to in the Senate, I was a small town councilman, and I experienced this firsthand in 2017. We and I was new to the board, or to the council, but we were encouraged to roll up the millage rates for no particular reason other than to maintain, our ability to be at that higher level. And I had the same comment as you did, that I feel like we're taxing without, unjustly, I guess. So I'm supportive of this. I appreciate you bringing it, and thank you for being here today.
Thank you.
Thank you.
Okay. Senator Pope.
Thank you, Mr. Chairman. I'm sort of like Senator McMath there. We're in a similar situation, and certainly we're in support of this. I do have one question, though. This would be no time frame when I could roll it up if, in fact, this were to get passed by the people.
You mean?
I mean, I could roll mine back 10 years from now if it was there, and I needed to raise it back to what it was originally set at. I could do that without any penalty. Is that right?
The life it expires at the same time that the millage rate expires.
That's what you're right.
Yes.
But if I have a millage for X
10
years.
years is typical.
So there's no end to it unless there's some millage that's supposed to end.
Yes, it ends. This ends when the millage
So
expires.
that gives some, I think, a lot of help to the local entities there that have got this, because they, a lot of them do, like you said, they want to roll it back, I'm going to tell you, but they're not going to if they're going to have to.
My hope is
Not the fear is that they may have to raise it sometime.
Yeah, my hope is that at the end of at the expiration of the millage rates, that the districts will take a harder look at their surplus, and when they go to levy the millage the next time, that they will use their surplus in order to lower the new millage rate.
Right, but they still have that opportunity somewhere down the road.
Yes.
Thank you, Mr. Chairman.
My pleasure. The board is clear. I'm going to go through the rest of the cards. There is some opposition. So Wendy Thibodeau, who's at the table, would like to speak. All the rest of these do not wish to speak but are present and in support. Brian Eddington, Louisiana Assessors Association. Kenny Kapowski with Magnolia. Scott Kirkpatrick with the Association of Levy Boards. Bob Edmond, Rochelle Roy with Lafourche Assessor's Office, Lucian Groff, St. John Parish Assessors, and Jeff Taylor, Louisiana Assessors Association, all present and in support. I'm going to make room for some of these other people who are in opposition. Jim Patterson with Lobby and present would like to speak. Would you please come on down? Tyler Gray do not wish to speak and present and in opposition. Also in present and not wishing to speak, Robert Scrotum with Louisiana Chemical Association. Mr. Patterson, you're up.
Thank you, Mr. Chairman, members of the committee. I am Jim Patterson with the Louisiana Association of Business and Industry, and I wish to remove my objection. I've had a conversation with Ms. Thibodeau, and in that course of that conversation, have been persuaded that I think we can work together to the degree that it may be necessary. I'm not 100% certain, maybe 95% certain that the language is fine, but I just want to, make sure, belts and suspenders, if you will, in terms of the purpose. But I do agree with her intent and the intent of the good senator with this legislation. I think that she makes a very good point. These taxing authorities are being forced into having to act prematurely, and that they would be willing to wait if they could. I think there's a lot of confusion and misperception around exactly what the requirements are. She made mention of the folks that feel like they have to do it that first year of the reassessment, and in fact they have more time than they realize. So I think that just need to make 100% certain that I'm good with it, but I think the intent I'm very much in line with. So I thank you for the opportunity to speak, but I do wish to remove my opposition at this time.
Okay. Well, Ms. Thibodeau can be very persuasive. We know that.
She does have a way.
Was it her argument or her smile?
It was her argument.
Okay. We'll go with that.
For the record.
For a question, Senator Reese.
Yeah, that before you leave the table, I'm actually, I hate to do this, but going back on an earlier bill, since you didn't take the table, could you just state for the record and for the entire audience to hear that you actually support the bill that Senator Luno brought earlier today?
Well, for the record, I don't support it. I don't object to it. There's a difference, and but that's progress, baby steps, as
That's
it
right.
were.
No, I agree with that.
That would be a huge distinction. Mr. Patterson, thank you for your time.
Thank you, Mr. Chairman, members.
So are you removing from both bills your objection This is
Yes,
the
yes,
constitutional
absolutely.
amendment and the, just to be clear.
Yes, sir. Absolutely. No, I appreciate that. Yes, sir.
Okay,
Thank you.
all right. The board is clear. Any amendments? Not on this one. Senator Smith, you have the right to close.
Thank you, Mr. Chairman, and I want to thank Mr. Patterson because we have been having discussions, and I did agree with to him that I would work with him if we did need to tighten some of this up just to make sure, and his concern was to make sure that some of these districts couldn't go back to any rate that was ever passed, and no, it is for the current term, and so we do need to tighten that up to make sure that that is, we believe it's tight, but if it makes people more comfortable, I am happy to work with them on that because we want people to be clear on it. Hopefully the other two that have objected, I think it's in their best interest to be for it because hopefully we can keep rates lower and that their clients can pay lower rates. But I will work with them as well if they have a desire to do that. Also between here and that magical floor place. But
Yeah.
I ask that y'all-
Magical land between here and the floor.
That's correct. So I'd be happy to answer any more questions, but I think it's good for our citizens and our businesses in our districts and in the state, and I would ask that you report this favorably.
Well, I also, one of the things that myself and Wendy Thibodeau do agree upon is this bill. It at least gives us the opportunity not to force people into rolling up, and maybe the taxpayers will get a break because of it. That being said, on a motion by Senator Smith to report Senate Bill 154 favorably, is there any objection? Hearing none, Senate Bill 154 is reported favorably.
Thank you, members.
Senate Bill 165.
And members,
Companion bill?
this is the companion bill. This that is the statutory piece of the constitutional amendment that we just discussed. All the same conversation applies to it as well. I think
Okay.
we do we have a technical amendment on this?
Okay.
I'll offer up that technical amendment if
Let
Ms.
me get to, Wendy, do
Lan
you
or-
care to speak on this when you said you wanted to speak?
If there's
It's
questions.
just a companion.
If there's any questions,
For the record, the same bill, all the same folks that were for the last bill are for this one, and all the people that were against are against this one, with the objection removed by lobby. You have the floor.
Okay, I think we're both making progress, man.
Don't count on it, Gary. We hadn't voted yet.
just to clear it up, the intent is to make it from the 2020 reassessment, whatever the millage rates are from that reassessment forward, that they weren't going to be able, if a taxing district has lost, they didn't roll to their maximum and they didn't collect that, they lost that difference, that they can't go back to that. It would be whatever the rates were for the 2020 reassessment.
Okay.
So whatever language needs to be tightened up for that. That wasn't the intent.
Okay. And Senator Patterson,
Yeah, the
Mr.
intent is to move from here forward. Yeah.
Okay.
Yes.
Mr. Patterson, you waive. You said you'd want to speak. You do waive. Okay, just to be clear. Senator Smith offers up Amendment 584. Ms. Heavey, would you explain?
Ms. Lynn will do this one. It's a technical amendment.
Technical in nature. Okay. Is there any opposition to adopting Amendment 584? Hearing none, that amendment is adopted.
I move we report with amendments.
You waive closing?
Yes.
As amended.
Okay. On a motion by Senator Smith that we report Senate Bill number 165 as amended, is there any opposition? Hearing none, Senate Bill 165 is reported as amended.
Thank you, members.
166.
Thank you.
Thank you.
Cards. you have cards? Senator Smith, you're up.
Thank you again, Mr. Chairman and members. Senate Bill 166 deals with historical tax credits. You know, we've dealt with that in the past, and in the past we have limited who can use historical tax credits, and that is against income and corporate franchise taxes. This would simply expand this to insurance companies and allow them to use it against their insurance premium taxes. Why do we want to do that? It opens up the market. It makes more demand for the tax credits, and hopefully generates more interest in companies investing in these tax credits, giving the developers and the people using it in the state a better bang for their buck on these tax credits. So it has no fiscal impact. It doesn't expand any of the limits of the program. It just expands who can use the historical tax credits.
So I see other people at the table, but let me go through the cards. Not wishing to speak, Gina Goings, Advantage Capital, Lenny Kapowski, Magnolia, Tony Toops, present, would like to speak, and Carleen
Dinkler.
Dinkler. Okay,
Handwriting.
Yeah.
Handwriting.
Sorry.
handwriting,
Yeah.
definitely. With Enhanced Capital?
Capital, yes, sir.
Yeah.
Sorry,
Oh.
I failed handwriting. so
Okay.
apologies.
We're very forgiving around here. Gentlemen, if you'd like to state your name and for the record.
Good morning, Mr. Chairman, members of the committee. Tony Toops, Advantage Capital. We're new to the historics business. We were not participating in prior legislation or the process, and we realize this is an opportunity to increase the number of Louisiana taxpayers, primarily insurance companies, who could utilize participating in the historics program, which is very successful and robust, and increase the amount of capital that would be available to projects, particularly small projects, because the insurers will pay a little bit more for the premium tax credits. So it increases competition among the tax credit buyers, if you will. And that's it in a nutshell, as Senator Smith said, not to gild the lily.
Okay.
Yeah, hey, Senator, Chairman, Carleen Dinkler, Enhanced Capital, 2437 Fern Street, New Orleans. I work for Enhanced, which is based here in Louisiana, and we participate and help find investors for historic tax credit projects. The credit, of course, has been great for the state and has had a positive ROI. And as Tony mentioned, really this would just allow more entities that are interested in investing in historic projects to do so, which increases competition and ultimately increases the amount of money that would go into projects. So ultimately, this is a bill that would allow the state to see the credit be more effective, and also projects have more funding go into them as they need it.
So as we add more bidders, the price goes up. Who pockets the difference?
Well, the project ultimately gets more of the money going into the project, and I think that's what's important. Is you as policymakers should want to see the tax credit be as effective as possible. So that dollar of tax credit, you're going to want to see, hopefully as close to $1 go into the project as possible. And by adding more competition, more players, that's essentially what's going to happen.
I appreciate that.
Yeah.
Yeah, I have been on record many times as being against most tax credits or expansion thereof, and fought last year against continuing to expand the historic tax credits.
Yes, sir.
But was convinced otherwise toward the end. So why would I want to add all the insurance companies? Why the insurance companies, first of all, and why would I want to add all the insurance companies to want to push up the cap on the historic tax credit?
Yeah. So, Senator, I think it's not going to affect the cap that you have on the.
I know
program.
it's not going to affect the cap, but
Yeah.
all their lobbyists and insurance companies are very powerful around here. Eventually, they're going to, as they utilize, they're going to want to shove up the cap. And my fear is that it'll put additional pressure and additional lobbyists to want to run the cap up on the historic tax credits. We've got way too many tax credits in this state already. So help me understand
well, first of all,
why
Sen-
we should bring the insurance companies in on this deal.
I think, again, it's about the free market and being able to have more competition. So having more competition is a positive thing. And, again, from the state's perspective as policymakers, you want to see that credit be as close to $1 for a dollar credit. You want to see $1 flowing into the project. That means that tax credits, of course, are revenue that you're not realizing, and understand that, and understand that's why you have some difficult decisions to make. But if you're going to have a credit, I think you want to make sure there's enough competition so that credit is realizing enough money or realizing a good amount of money for the project. So I would say adding more people or more entities that are interested in investing means that you're making the credit more effective and more efficient.
And I will, not to be argumentative, but I will add what the Tax Foundation told me, has been telling me for the last year. As we give more credits, we narrow the base and we up the rate that everybody else pays.
Yes, sir.
But,
and absolutely think that, sunsets, we believe in sunsets and think we should have to come in here and talk and have these conversations with you. I will say, look, there are other states that have done this. Texas, our neighbor to the west, did this back in 2017. We have one of the best historic tax credit programs in the country, and we have, I think people come to Louisiana to see our unique architecture, so it's an important part of our economic development here. But there are other good state tax credit, historic tax credit programs around the country that utilize the premium tax.
I understand. All right. Gentlemen, Senator Peterson.
Yeah, thank you. Senator Smith, just what we did earlier, reducing the tax credit for the electric vehicles, but we're increasing the tax credit for big insurance companies?
We're not increasing the credit. We're just allowing more people to use the credit, so the cap is staying the same.
But that's who would be able to use it, right?
The insurance companies would be able to use it.
Thank you.
Okay. Okay. We've read all the green cards.
Mr. Chairman, we do have was reminded
an amendment?
A technical amendment, so I'm told it's technical.
Okay.
Ms. Lang,
while we'll take up the amendment now.
When you're ready. When you're ready, I'll offer it up, and Ms. Lang can maybe explain it.
Who, Ms. Lamb?
The first amendment is as technical. Amendment number 2 on page 3, line 11, after return, insert, and shall not be required to pay any additional retaliatory tax levied by RS 22-836 as a result of claiming the credit. This will provide that taxpayers using the credit against state premium tax are not required to pay any additional retaliatory tax as a result of claiming the historic credit.
So what's that mean?
Maybe Tony can explain that.
Yeah.
Sure, happy to do so. So retaliatory tax is a component of the premium tax that out-of-state insurers pay. So each state and union has a retaliatory tax whereby basically the states equalize the value of the premium tax that each state charges other states' insurers. So if we charge less than Georgia and Georgia charges a Louisiana-based insurance company X, Louisiana will charge Georgia-based insurance companies the same amount as Georgia charges ours, in a nutshell.
All right. That's clear. So you're offering up Amendment 479?
Yes, sir, Mr. Chairman.
Okay. The gentleman has offered up Amendment 479. Is there any objection to adopting the amendment? Hearing none, 479 is adopted. Now that it's in the proper posture, I've got a card from Secretary Kimberly Robinson, who would like to take the table and give us her perspective. Okay. We maybe should have had you up to explain the amendment first, but I think I got it.
Good after. Oh, it's still morning. Good morning.
It is barely.
Barely. Kimberly Robinson, Secretary.
Appreciate your patience, Madam Secretary.
I appreciate being here. It's lovely to spend my Thursday morning with you all. I've enjoyed myself today. The committee is always so nice. So the retaliatory tax amendment, the explanation of retaliatory taxes is correct, but that would not be a technical amendment. That amendment means the insurance companies won't pay the penalty for using these tax credits. So I wouldn't say that's necessarily technical. It's a clarification of the insurance code, because otherwise they would pay more tax because the retaliatory taxes would have an impact. So not necessarily technical, more cleanup, because otherwise there would be an impact to those insurers for using this credit. And I'll just explain why we didn't include premium taxes in most of the tax credit programs when they were enacted. So the insurance premium taxes are, of course, collected by the Department of Insurance, and they're treated separately because the insurance premium taxes are truly separate from the way that the income and franchise taxes work. Insurance companies have an exemption from franchise tax, first of all. They're not subject to it. On the corporate income side, insurance companies receive a credit for the amount of premium taxes they pay. So they don't actually generally pay the corporate income tax because they get a credit for the amount of premium taxes they've paid. So on the premium tax side, they're subject to the taxes on the premiums they receive in Louisiana. If we provide this historic tax credit to them, they can use it to offset their premium taxes. To the extent they owe corporate income tax, they then take a credit against their corporate income tax for the premium taxes paid. So we give them a historic tax credit. They use it for their premium taxes and then takes a premium tax credit against their corporate income tax. So they get the benefit of all the credits. But on the premium tax side, if you make an investment in Louisiana as an insurance company, you get a credit against your premium taxes. The ways that you get that credit for premium taxes: investments through mortgages, loans, real estate. So if you invest in a historic structure, which is real estate, you could earn a historic tax credit. You get a credit for premium taxes, and you get a historic tax credit that you then get to apply to your premium taxes. Do you see why we didn't include premium taxes in the credits that were eligible for premium taxes to begin with? So yes, they're new to the historic tax credit world, but when we enacted this many years ago, we knew why we weren't including premium taxes in the eligible credits for historic credits. There were too many opportunities for double dipping. This Rev and Fisc committee has always been concerned with stacking of credits. The premium tax presents too many opportunities for stacking of credits. That is why it was not included in many of the credits that you see in Title 47.
Excuse me. To say the least, you have grave concerns.
To say the least. And we did give insurance companies their own New Markets Tax Credit program that last year. We expanded it. We did it in 2019, and we expanded it. So there are opportunities for insurance companies for tax credits.
Would in your opinion, would this amendment change the fiscal note?
Well, the retaliatory tax piece is going to have an impact on the premium tax liability. If you use a tax credit over on the premium tax side, it's going to impact the fact that there would be additional premium taxes due to the state, but not on the fiscal note necessarily. If you change premium taxes, there'd be additional retaliatory taxes, so the insurance companies aren't going to use the credits. So it wouldn't change it in that regard because they're not going to pay more retaliatory taxes.
Okay.
it wouldn't make it attractive to them to
A good bit of
use
your
it.
concern, if I understand, is that there could be, without more reporting, they could be double dipping on these credits from both sides because of the two separate agencies that we have.
Just the nature of the premium tax credit structure that's already in place. If you make an investment under existing law, you're entitled to credits. There are just too many opportunities that insurance companies can already make investments in Louisiana that bring down the rates that they pay in premium taxes. Then they get to use premium tax credits to offset corporate income tax credits. You purchase historic tax credits or you make investments that qualify you for historic tax credits. There are so many opportunities to offset your tax liability, and we're making it all available.
Senator Ward for a question.
Thank you, Mr. Chairman. Obviously, in this state, we have a mountain of tax credits and a bunch of different industries that benefit from a bunch of them. How many other industries, like the insurance companies, benefit from stacking or from all sorts of different credits in a similar way? Are there other industries that are able to do the same thing?
So for the most part, what the legislature has attempted to do is limit that. So for example, with the digital media credit, if you utilize the digital media credit, you're not eligible for any of the other incentive programs. So you can't have a job that counts for digital media and quality jobs. You can't use them for both things. So we put provisions in place to prevent that happening. And you don't have a lot of industries that have incentives that are structured that way. We've tried our best to make sure that that didn't happen. The previous chairman of this committee spent a lot of time focused on that. Going back for the last really 15 or so years, as tax credits came before this committee, there was a lot of focus on making sure you had anti-stacking provisions added to that.
Mm-hmm. And this is more of a general question than I guess bill specific, but if you could start from scratch and build out a tax structure, would you rather a lower rate with no credits or very few credits, or would you rather a higher rate riddled with many tax credits and things like that? Just for knowledge, future knowledge as we kind of move through this session.
So the preference would be to have a broader base and a lower rate with fewer credits. The fewer credits, definitely less administration. We have a staff that spends a lot of time with credit administration. That staff could be utilized doing many other things. And the broader the base, the lower the rate can be. And when you have a broad base, fewer exemptions, lower rates, less complexity. Because the goal is always voluntary compliance. When people know what their liability is, know how to calculate it, it's easy to comply, they can comply. When you create complexity, people look for ways to avoid and ways to loopholes that they can get through to say, I don't have to comply because they're never going to figure out that I did this, because you have all of these steps to get through to do that.
Really smart people can use complexity to their advantage.
Yes.
All right. Well, thank you.
You make a very compelling argument. Senator Luno for a question.
Secretary, the double dipping that you explained to us a minute ago, that's because of the bill, not because of the amendment, right? The amendment keeps them from paying retaliatory tax?
Correct.
So if we were to amend this bill to take away their ability to double dip, would that cure your problems with it?
So my problem is expanding the historic tax credit to premium taxes. So the problem is the bill itself.
Does it cost us more money to do that? The fiscal note is zero on it.
The fiscal note is zero because we still have a historic tax credit program. You're going to have historic tax credits that are certified. They will be certified. You will claim them. Right now, since 2014, when we started keeping the registry and the Department of Revenue took on the process of being the one that certified the credits, we've certified about 664 million, and there are about 107 or 104 or 5 million to be claimed on returns. So you'll still have that amount. You'll still have new projects that are developed, but you may not have the impact on the premium tax from the credits being claimed against premium taxes, and the impact of the premium tax revenues showing tax credits claimed against them versus the tax credits that are claimed on corporate income or franchise tax. And premium tax has different things. So, for example, one of the premium taxes specifically says that the funds that come in go to state police salaries. There's a state police salary fund that's paid directly out of a premium tax
They have one on every
payment. You can't really pay those with tax credits if that's what ends up happening.
I'm trying to figure out why the Legislative Fiscal Office has a zero note on it.
Because it's just another way that you claim the credits that are already being authorized. It's not a new tax credit that's being authorized. It's just another way that you claim the existing credit. So what I assume is that they're not thinking about it's claiming it against a different source. It's already a credit that's authorized.
You may have heard this about me, but I'm not real wild about these tax credits and stuff. I got a problem with some of them sometimes.
I'm shocked.
But if there is a way for us to somehow enhance the ability of insurance companies to make profits, so maybe we could lower premiums just a little bit, that might be a good thing. My thought is, I'm wondering if this is one of those ways to do it, if it doesn't cost us any more money to do that. Now, if there's the double dip thing, I think that clearly has to be addressed in this legislation if it goes forward in that magical land that we often talk about. So maybe we ought to think about an amendment and see if that makes this more palatable. Thank you.
Yeah, I think Senator Smith would like the mic.
Thank you, Mr. Chairman, members. Thank you, Secretary. Yeah, I can see there's concern up here. I want to make sure we're not double dipping as well, and that we make the best bill possible. What may be the thing to do here is to pull this back, if you will allow me, Mr. Chairman. We can go and work on some of these issues and try and answer everybody's questions a little bit more, because I'm getting some conflicting information as well with some of the things the Secretary has brought up today, and I want to make sure that we're all versed and clear on it. So if, with the Chairman and the committee's permission, I'll pull the bill and bring it back once we do that.
Absolutely, with all due respect.
All right.
So we'll stay in the present land instead of the mythical land.
Thank you.
Thank you.
Senator